Hi and welcome to this Blueberry Markets video update with me, John Kibler. In this video we're going to take a look at the key levels on gold and what could happen in this upcoming FOMC federal funds rate decision. Now this meeting is going to be a little bit trickier than usual as the Federal Reserve need to be a little bit considerate towards the economy and the banking system. You know, you saw the latest jobs and core CPI data sort of suggesting that the Fed should continue to hike in this meeting. However, the banking system crisis would want the Fed to sort of pause or at least talk of pausing in this meeting. However, it is likely that the Fed are going to hike rates by 25 basis points in this meeting with a move that's going to bring them to 5%. Now, investors are going to be watching that dot plot very closely to see if the policymakers are looking to hike rates further. You know, we had Federal Reserve Chairman Powell in his recent visit to Congress mentioning the potential need to hike rates beyond 5%, and that was met with kind of heavy buying in of the US dollar at that time. However, I think it's very unlikely to use that language in this meeting. I think we're going to see maybe the 25 basis points hike and the need to pause in the near future. So it will be interesting to see how this one does play out today. Now, looking at the price of gold, we can see that it actually came up into an area of resistance, which is around about this $2,000 level, which was this high that formed back on April 17th, 2022. And we have seen some rejection there. Now, whether that's a bit of profit taken because of the sort of strong momentum move last week, obviously we don't know, but I would imagine it would be, because if the Fed are going to be slightly dovish in this meeting, then we should potentially expect the price of gold to continue to the upside here, or traders that are looking to go long could be looking to see price come back up into this $2,050 high. These major highs on gold, you know, the last time it came into there was the 6th of March 2022. And we had a big rejection. So are we going to see the range highs essentially on gold, or are we going to see price trade lower? Now, if I go into a lower time frame, just this 4-hour time frame, we can see here that price of gold had quite a strong sort of rally into that $2,000 level. We then started to push back down. We formed a little bit of like a minor head and shoulders before prices moved down. Now we're back into an area where we could find some potential demand in the market. You know, this is an area of sort of volume. Prices traded through that. Now we're back at that sort of edge there, and at the moment buyers are starting to step in on gold, and it looks like we are starting to see a little bit of more buying going on there. So that could be the sort of start of price pushing back to our upside here. Obviously the $2,000 level is going to be an area of importance for us because price has been there most recently and rejected. If we trade above that $2,000 level in the near future, then it looks like we're going to be heading towards the 2050. Now what we may see in this meeting is one or two things. We may see if a price try and break into this area of volume here and then start pushing back to the upside, or price may just sort of take off. The other option is if the Fed are aggressive. Now, I don't really see the Fed being aggressive in this meeting, but if they say, look, we've got to kind of ignore the sort of banking situation. I know they're not, because they're guaranteeing some deposit backstops for the banks. So there is some kind of help there for the banks. So if they were to sort of say, look, we've got the help for the banks there, but, you know, we need to control the sort of pressures on inflation, including the labour market and things like that, and that could lead to further hikes in the future and a little bit more aggressive hikes, then I think gold is going to move lower, and we could possibly see gold reach this sort of 1915 level or even lower at the 1890 lows. That being said, like I said, I think that one's unlikely in this current sort of market situation at the moment. I think we're probably more likely to see a dovish side of the Fed at the moment, or a very cautious side of the Fed, because although we don't really know what's coming up in this meeting, they could just be a little bit sort of standoffish, just to say, okay, well, we're actually just going to focus on the data, and that kind of gives them a little bit of a sort of breathing room to see how upcoming data set comes out. Now, if we go to the hourly time frame, If I was a technical trader here, I'd be saying, well, you know, look at this breakout of this consolidation. That suggests higher prices, surely. However, you know, is this just a preemptive move ahead of that FOMC meeting coming up later? So we'll see what happens to the price of gold. I think the key levels to watch, obviously, the $2,000 level here. That's evident since price has come into contact with that recently. You could argue this sort of 1960 area as well, these highs that formed back in February. Obviously price is trading beneath that now, so that could be a resistance point. We're at the support already. We're at around about the 1930 handle, and then we also have the 1908 or 1915 handle below that. So just some points to consider, and just mark them out and see how price potentially reacts to those points. I'm going to leave it there. I hope you enjoyed this video update. If you did, leave this video a thumbs up. Subscribe to the YouTube channel to see some more Forex trading content, and I'll speak to you in the next video.